Craig Parker here for Parker's Property Sourcing. Coming at you with another video today. And today's video is basically just an update on the market currently right now in 2025. Going to be sharing some key insights on where the market's heading, covering interest rates, house prices, rental growth, and what it all means for investors like yourself. Hope you're enjoying the channel so far. Hope you're enjoying the content. As I continue to grow, the content will get better. I'm going to be 100% honest and transparent in anything I talk about on this channel. So if you're enjoying it, drop us a comment, share your page with fellow investors or future investors or people that are just showing an interest in the property market, and let's all grow together. So, the UK property market, where are we heading, basically? So that's what basically we're covering, and it's pretty good. I've done a little bit of research today just to put this video together, and for me, it's all positive. It's all positive. It's all good. So, interest rate and the mortgage environment. So as of September, so this month, 2025, the Bank of England base rate is currently sitting at 4%. 2-year mortgages are averaging around 5.16%, while the 5-year deals have fallen below 5%. So really, really good. Really, really good. And that's been the lowest it has been since 2022, before COVID, basically. So this is giving us a little signal, some relief, but they are expecting rate cuts to be gradual, and with the bigger moves more likely to be in 2026. So borrowing is still, quite expensive than before the pandemic, because before the pandemic they were very low, and people were buying houses left, right, and centre. But it doesn't mean that, as an investor yourself, you can't reshape your strategy or have a look at different areas of cheaper entry points and so on and so forth, that if the interest rates are still a bit higher than they have ever been since I've been investing, there are still deals and areas and good little pockets in the UK, which I touch on in this video, that we can still invest in and still make some decent, tidy profits. So, house prices, trends and forecasts. So, house prices have shown resilience, which is good. Since I've been investing now for 8 to 9 years. I've never experienced any of my houses or any house prices, when I'm doing my constant research, dropping in value. Like nothing, like since I've been doing it, no house prices in any area in the UK have dropped in value. Yeah, so that's something that's really, really positive as an inspiring investor or a seasoned investor, that the house price is resilient. The house prices are resilient and they're strong. Yeah. So the UK average now sits at around 269,000 for a house, basically. So that's the UK average across all of the UK. So that's up 3.7% year on year, which is good. It's really good. But in the northeast, it's up nearly 8%. The northeast is areas that I have started to invest in myself, but there is little pockets as well that are not too far up from the northeast that are going up, but the northeast has shown nearly 8% growth, which is amazing. Scotland's almost 6%, while London is not hardly moving. It's just at 0.8%. So just to stop there for a second, when I'm doing my videos and my TikToks and my YouTube videos and stuff like that, and when I'm talking to people, a lot of people like to base their arguments to me on the London market, yeah, which is fair. But like I said, like we're looking in this video now and this information I'm giving you, London, the price increase has only been 0.8%. So you're gonna say, yeah, it's not a good area to invest in. Well, no, it's not really, because if you want to see good capital growth, London may not be the place for you. But In the northeast, it's 7.8% plus more. I've seen bigger increases, to be honest. That's where you want to be, hedging your bets, basically, if you look at it like that. That's where you want to be hedging your bets. So looking ahead, most forecasters suggest 2 to 4% growth throughout the rest of 2025. So right now, there's no crash. There's no property crash happening from what I can see. With all the trends and the forecasts that have been put out there, and even researching on what a house was worth, the beginning of the year till now, they're all rising. Because we're in double digits right now, double-digit growth in certain areas. So it's good. It's positive. It's really positive. House prices are rising. House prices are rising. So the rental market, which is also important to us as investors, especially boring vanilla buy-to-let properties, which is what I'm investing in. I have to keep an eye on the rental market as well. So just a bit of information on the rental market. They continue to outpace house prices at the moment. So on average, rents are up 5.9% year on year, with a typical monthly rent in the UK of 1,343. Wales currently leading the way at nearly 8% growth, following Northern Ireland at 7.4% and England's at 6%. Scotland's at 3.6%. So again, they're all rising. Property prices and rental prices are rising. Rent prices are increasing a bit more rapidly than what property prices are, which is also good. Do you know what I mean? So when we're talking about return on investments, and getting a good return on our money when we're invested in property, hearing that the rental market is growing quicker than what the house prices are growing in at, as an investor, you're pretty much rubbing your hands together. You really are rubbing your hands together. So it remains strong. Rental markets remain strong, and it is pushing rents higher, because there's more competition. More people want to buy properties and do their properties up at a good standard. So it's just raising the level, month on month, which is really good for us as investors. So when we're doing our numbers and we're working out our return on investments, we're putting in a really good refurb budget in our return on our investments calculations. So we are keeping up with, the competition out there in the rental market. Competition's good as well. So supply and demand, and yields, or return on investments, whichever way you want to put it. One of the biggest drivers is supply, basically, or lack of it. Rental stock is still around 27% below the pre-pandemic levels, while tenant demand is at record high. So let me break that down. What's available to rent versus how many people are looking to rent is less. So there's more people that are trying to find rental properties than there is on the market. So for me, that's supply and demand. Any business person that's successful talks about supply and demand. So in property investment, supply and demand is massive right now. There's more people looking to rent than there is properties to rent, which is, it's amazing. It's absolutely amazing. And what that gives us with those little facts there that I'm giving you is very competitive letting market for investors, which is translating into strong return on your investments. Nationally, your yields are at 6% right now. And in the Northeast and Scotland, they're closer to 7.5%. So these are some of the best returns we've seen in years, basically. So again, now's the time. You find your deals, you do your numbers, because the rental demand is so high, you're going to get a good return on your investment, and you're going to get low void periods, because there's more people looking to rent properties than there are properties available to rent right now in certain areas. So risks and regional variations. So of course there are going to be risks. mortgage availability remains stretched. Inflation is still above target at around 3.8%, and the government policy could shift with possible changes to the landlord taxations and the regulations, basically. So regionally, London continues to lag behind, which I've said before. For me, I don't invest in London. I just don't. But in the northeast and Scotland are outperforming, London. So this means one size fits all approach won't work. As an investor, we need to think about, what areas are we invested in now, and why are we investing? Because even capital growth, when we talk about capital growth as well, it seems a bit larger in the northeast. So you get better rental returns, higher rental demand, and capital growth. Is away from London at the moment. So investor strategy and opportunities. What does this mean for investors? Well, as I've said, high yield opportunities are still out there, especially in the northeast and Scotland. The buy-to-let demand is strong in areas outside of London. Affordability is better, rental demand is rising, and the key is to focus on markets with tight supply and high rental growth. That's my strategy. I look for areas that are got good capital growth, good things that are happening in the area. Regeneration projects in the area is one thing. It's a tick for me. But the other thing is okay, is there more properties that have been let than available to let in that area? And if that answer is yes, it's a strong demand area. So, that's a key focus, to think about when, investing as a property investor. What I'd be doing as well is be locking in mortgage deals when you see in good rates. Lock them in for as long as you can, because overall we're expecting house prices to rise in 2 to 4% in 2025. Rent climbing 5 to 7% in 2025, which is making the market very steady with growth, with strong rental demand. So if you're buying a property on a mortgage and you're getting a good return on your investment, try and fix that for as long as you can. The interest rates are slowly dropping. They're gonna, as I said in this video, 2026, 2027 is when they're gonna gradually start going down based on the information I've researched on. Disclaimer, you guys do your own research, but what I'd be doing now is locking it in for as long as possible. Locking it in as in fixing your mortgage rate for as long as possible, so you're getting a return on your investment for as long as possible. If you fix your mortgage rate for 5 years, but you know that you can be increasing your rent every couple of years, depending on what sort of landlord you are, you're in a win-win situation, So, again, thank you for watching this video, and it's a bit different to what I've done before, but it's more of just an overview on the UK property market in 2025. If you'd like to discuss sourcing high return on investment property deals, visit www.parkerspropertysourcing.com or chuck us an email at info@parkerspropertysourcing.com. Be more than happy to talk and discuss over, deals I find, what I look for, what areas that I'm investing in. We can, as I've said before, we can chop it up and see if we can do some business together and find some good return on our investments. I've been Craig Parker. Until next time.